Chart runners, what's up, family? In this video, I'm going to be going over exactly how I mastered trading gold. Just a little bit about me before we dive into the video. My name is Mike Lito. I've been day trading for over 6+ years now. I got started trading back in 2019. If you aren't familiar with my story, it took me 6 years to get a 4-year degree. I went to school for mechanical engineering, ultimately got kicked out of college. And then when I finally finished my degree, I could not find a job to save my life, even though I spent thousands and thousands of dollars with student loans just to get my degree and not be able to find a job. So that's what ultimately led me into trading. I'll do pretty much a breakdown of my story in depth in another video. But in this video, I'm going to be explaining exactly, like I said, how I mastered trading gold. And then I also will give you guys a trade breakdown on the trades that I took last week, which I was able to make over $16,000. And then I also will show you guys the withdrawals as well. So let me go ahead and show you guys my trade history from last week. So as you can see, I made over, if it'll focus, $16,000. Hopefully you guys can see it. And then also let me show you guys my withdrawals. So hopefully you can see my withdrawals. As you can see, I withdrew $10,000 last week, and then I also had a withdrawal of $5,000. So withdrew just about $15,000 last week. And like I said, it's simply from trading gold, right? Now, with that being said, if you aren't too familiar with me, or if you're brand new to this channel, welcome. Hit that like and subscribe button. But I just want you guys to understand my style of trading. So pretty much my style of trading is market structure, price action, and then I also use my Fibonacci levels to determine my take profit levels. So I like to keep trading pretty simple. Like I said, in this video, I'll be giving you guys the breakdowns and my thought process on exactly what I did to master gold and the things that, it overall takes. A lot of people in trading don't really talk about the psychological aspect that it takes to be successful inside of the market. So not only did I learn the price action and how gold moves, I also had to train myself and train my mind to be able to think in a sufficient way to be able to trade gold. Because as we know, if you're watching this video, you probably had a few experiences with gold, just like me, right? So I had to understand that gold isn't just like a regular forex pair. It's its own little beast. And it has a lot of fluctuations. It has, gold can pull back 100 pips in one 15-minute candle. So just being able to train my mind psychologically to be able to accept that is pretty much how I was able to master gold, because I mastered my mindset, right? So most people think, oh, I'm just going to jump on these charts, master gold, the technicals, and that be it, right? No, so it's a lot deeper than that. So I got my laptop. Right here, and then I also got my desktop in the back, but I'll be pretty much recording everything, my trade breakdown, on my laptop, just so you guys can see all of the trades that I took, and then give you guys an in-depth on what I was thinking throughout my trades. Right now, like I said, if you are brand spanking new, make sure you are inside of my free Telegram chat. The link will be in the description. I pretty much go over all of the trades that I take and give my analysis every single week. And I also do video breakdowns inside of my free Telegram chat. Like I said, the link is in the description. So if you want to be a part of the Chart Runners family, where I pretty much give my free education and all my biases and my analysis for the week, like I say, hit that link in the description. Now, before we get into the trade breakdown, I want to talk about a few things, right? Now, I didn't master gold simply by trying to predict price or say gold is going to go to 4,000 or gold is going to go to whatever the case may be. I mastered gold simply by waiting and understanding how price is actually moving, how price is reacting during the sessions, right? I understood that gold is a New York session pair, but it also can move during Asian. So if I understood that gold is moving during Asian, then I need to be prepared to take an entry during Asian session simply by understanding that gold does move during that time, right? So where most people go wrong is that they think, oh, I have to trade at this exact particular time. When trading gold, I understood that it was no particular time, and it was all about the art of waiting on gold to be ready for you, not trying to make gold ready. Because if you enter gold way too early, gold can hit your stop loss in an instant. Gold can wipe you out. Gold can hit you with the crazy wick and then go in your intended direction. So it wasn't about me trying to predict gold. It was, like I said, it was all about me mastering waiting for gold to be ready for me. Now, the crazy part is gold literally used to bully me. Like when you think about a bully in high school, like gold used to bully me when I very first started trading because I really didn't understand the behavior. And what I always tell people, like my students inside of my trading community, I always tell them that like you have to know the pairs like the back of your hand. So I had to study gold and understand the behaviors of gold to really understand, okay, how can I take this information and then apply it and then also master my mind, like I said, in order for me to be successful with this pair. I cannot take the information that I know about, you know, GBP USD or US 30 and then go apply it to gold and think that they're going to react the exact same way, right? So like I said, I literally used to get bullied, but now I do the bullying inside of the market on gold, right? Another thing that I want to talk about with gold as well is understanding like my stop loss placement. So I'm gonna go ahead and jump on the screen and pretty much explain that, but stop loss placement in gold is crucial. But enough with that being said, let's just go ahead and hop on the charts and get straight to it. All right, so now that we have the charts pulled up, I just want to talk about a few things, right? So I want to talk about why I trade gold, and also understanding like why it's pretty much my main pair. So gold is pretty much my main pair because it gives me enough volatility to catch bigger moves without also having to, you know, wait a long time. So for gold, I can catch, you know, like in this move right here, I caught over 400 pips, right, in one day. So over 400 pips in one day, that's a very solid move, especially when you throw a nice lot size on there. You can definitely take advantage, right? And then also understanding during the sessions, I can catch over 100 pips in one session just by trading gold because it gives me those fluctuations. So that's one of the main reasons why I like trading gold. And also, like I said, it is a New York session pair, but it also does move during the nighttime. So if I miss out on a trade or if I don't trade in the morning, I can definitely take advantage of the trades during the nighttime and still, you know, make money. Right now, let's talk about a few things on gold. So a few things that we need to understand on gold. Gold is not a regular pair. It moves completely different. Stop can range from 50 to 100 and stop losses in a fluctuation area when trading gold because it can easily get hit. Right now, another thing, gold follows market structure very well. So since like I said at the beginning of the video, I like to trade market structure. I like to trade market structure and I like to trade price action. And I also like to trade Fibonacci. So when I trade Fibonacci, market structure, and price action, I need a pair that follows it very well. Now, gold is definitely a pair that follows structure really well. As long as you understand structure and you understand how the market moves, then you can definitely take advantage of gold. So just a quick breakdown on how the market moves. If you guys have been following me for a while, you know I've been trading like this since 2019. You can go back and watch all of the videos from the start when I very first started teaching and to now, right? So when you think about market structure, especially when trading gold, we have an uptrend forming higher highs, higher lows, so forth and so on. But during these higher highs and higher lows, we know that the market moves into three phases. Three phases go as such: impulse, correction, continuation, correction, continuation. Right now, like this is the terminology that I've been using, like I said, since 2019, and this is pretty much allowed me to master trading gold by just understanding this concept of market structure and understanding how the market moves. Because when gold gives me a brand new impulse, I know that it's going to correct before giving me a continuation. Right now, with gold, sometimes when you do catch a very impulsive move, sometimes the corrections aren't super deep. Sometimes on gold, you can have a correction like this before continuing on up, right? It's not a super deep pullback. Typically, if you trade breaks and retests, you might think that price is coming back here and it will, you know, continue up. Sometimes on gold, you don't get that. So understanding that about gold allowed me to master it because I could take advantage of the moves without actually having to wait on the retest of this area and understanding the price action, what is telling me if more buyers are in the market or more sellers in the market. so forth and so on, right? So like I said, gold followed market structure very well. And then I also want to go over entries with gold and how I tailor my entries. So like I said, I'll break that down here in a second. And then also I want to go over my risk management with gold, right? And understanding, like, for gold, you're not going to catch really, you know, those 10-to-1 risk reward with trades. It's just not feasible with gold, where if you want to actually master it, you want to actually place your stop losses, like I said, in an area where it's not going to get hit, right? So with that being said, let's go ahead and dive into pretty much how I approach gold from a daily basis, right? So whenever I trade gold, and actually I'll pull up a fresh chart so y'all can kind of just see it from the top down. So we have a fresh chart here. Whenever I'm trading gold, I am going to start from the highest time frames, right? So starting from the highest time frames gives me a sign, or gives me understanding on what's the actual story of price. So I'm a firm believer in pretty much understanding what's the story and looking at the market as one big story. So to pretty much, I'll do my top down analysis on gold before I even look to trade it, right? So as you can see here on the monthly time frame, we have been in a very bullish uptrend. Like the last few months, prices just been pumping, right? That's on a monthly time frame. On my weekly time frame, I like to identify what are my key levels, right? Like what are my levels where price has been breaking previous levels of resistance, previous levels of support, so forth and so on. So on the weekly, we can see that we broke these previous highs here with a brand new impulse. Knowing that we broke this with a brand new impulse, I know long term we need a correction before we catch an overall continuation. However, this is on the weekly time frame, so I'm not going to be paying too much attention to it unless we are near one of these areas, because it's, you know, it will take a long time for price to pull back into these areas. Now, one thing that I like to identify as well is I like to pay attention to my daily time frame. My daily time frame gives me pretty much insight or data on what is pretty much about to happen next. So the daily is kind of like my bread and butter with gold, and understanding what's, like I said, what's about to happen next. So one thing that I like to do is I like to pay attention to the previous day's candle. So like, let's just say I have this previous bearish engulfing or bearish candle here, right? If I had this previous bearish candle here, I know that this is telling me that there are some sellers inside the market, but I also see that candlestick closed here at this level of support, and it failed to break this level of support. So that's letting me know that if we close beneath this area, then we could continue to push down on a daily time frame. But if we close above this candle as such here, then that's letting us know that there are more buyers stepping inside the market, and we can look for price to continue to push up, right? So if we just pay attention to that scenario in itself, we can see like here we have these candles engulfing these previous candles, and then what did price do? Price pushed up. We have candles engulfing here, price pushed up, so forth and so on. So it's letting us know the overall direction on a higher time frame based off of our daily time frame. So that's something that I always keep in mind when I am trading gold. Now, since gold has been on this, you know, this huge bullish uptrend lately, literally you can have been milking the markets, right? And that's why, like, even I said in the beginning of the video, I was able to make $15,000 trading gold last week, just simply off of the little fluctuations. But imagine when you catch the trades in the trending market, right? Now, with that being said, we can see here on our 4-hour time frame that price is kind of in this consolidation range. Here, price has formed a level of support. We got resistance, we got resistance, we got resistance, right? So every line that I'm drawing on my chart is supposed to tell me a story. So typically what I'll do when I'm doing my top-down analysis, I'll label these based off of the time frame that I see these on. So since I'm on my 4-hour time frame, I will label these 4-hour levels of resistance, so forth and so on. Now, dropping down to my 1-hour time frame, this is where I can get a little bit more details trading gold. And also I understand, like, okay, this is going to be my intraday moves. These are going to be my right now money, right? So when I'm trading, I'm looking for price to react at certain 1 hour levels and 4 hour levels, because those are the areas that where I'm going to intraday. So I intraday trade gold. I do not swing trade gold because it is so volatile. Like I said, you can be up, 400 plus pips and then it pull right back down and you just lost 400 pips worth of profit. I would rather not do that. So I pretty much just trade gold from the sessions that price is currently in. So if I trade gold during New York, I might hold it for 1 day, just depending on the move. But other than that, I don't really like to hold gold for too long of a period of time, simply because of the fluctuations. But like I said, this is how I master trading gold, because I understand those fluctuations and I have the mindset behind it to properly trade gold. Right now, based off of this 1 hour time frame, I can see that we have this like uptrend structure here where price is failing to make new lows here, and then my overall main trend is still bullish, right? So we still can expect price to be bullish. So on my 1 hour time frame, I am failing to make no lows, right? So that is a sign. When you are trading gold, if you have failed lows or failed highs, that is a sign that price is not going to continue to go in that direction. So we can see here with this little temporary downtrend, we were failing to make new high points every single time. And what did price do? Price then went in to make a new lower low and the lower high, lower low. And then what happened? We broke above this structure point here. Impulse, we had a correction, then we had another continuation. We had another correction. Price failed to break lows here. And then guess what? Now we are getting our continuation phase based off of price failing to break new lows, right? So whenever I'm on my 1 hour time frame, my H4 time frame, I am paying attention to those details to see if we are having any failed lows or failed highs when trading price. Right now, currently where price is at, this is at this level of 4 hour resistance, like I mentioned. And if you've been following me for a while, I go over all of my trades and pretty much break down all of my setups for the week every single Sunday. So if you like I said, if you're brand spanking new, then you can follow my page or you can subscribe to this channel, and you can follow my updates for the weekly biases that I give out on gold every single week, right? So, and I'll just give you guys pretty much an insight. So just the insight what to expect going forward, and you can kind of fact check this, once price, moves, because currently today is November 9th. So overall, based off of what I'm expecting on gold for where we are right now, if price breaks above this level, retest this level, then I'm definitely expecting for price to continue to go to the upside, because we are in this consolidation. However, if price breaks down to the low, creates a new low, lower high, then I will expect price to go to the downside. So I like to keep gold trading simple, and pretty much break down price on time frame by time frame, right? Now, based off of my 30-minute time frame, we can see it's pretty much telling me the same story. I currently have this uptrend structure where price is, every time price touches this trend line, it bounces, it bounces, it bounces. So if price was to make its way back to this trend line again, I could potentially expect a bounce, right? Now, I'm going to go back to my main chart and pretty much break down the trades that I took on gold and my thought process behind those, right? Now, with that being said, we can see here to the left, to start off with the very first trade. This trade was a simple break and retest of this level of support. So as you can see, we understood that, price was forming this uptrend structure on H4. So the H4 structure, impulse, correction, continuation, correction, continuation. We broke this previous higher low point. So whenever you are in an uptrend and price breaks beneath the previous higher low point and gives you a retest, that is a sign that the market is now going to transfer from a uptrend into a newfound downtrend. So what happened on gold? We had that break of this structure here, impulse, we had a correction, and then we had a continuation. Now I missed the initial entry up here. So what did I do? I waited for another break of support, come back to retest support as resistance, and then I caught the sales down. So what that looks like on our smaller time frames is such. We can see here, we can see here that price broke, came back to retest, and then gave us a bearish variation candle. And then that was my entry to go to the downside. All right, so what that looks like on N15, like I said, we broke this level of support, came back, retested, and then this entry signal here, this bearish engulfing these candles here, was my entry signal to go to the downside, right? Then as you can see, I carried it to this next level of support down here, and that was a trade that I took for the week. All right, now another trade that I took that I want you guys to pay attention to is this trade right here. So this trade eventually hit this lows and then gave a impulse push up, came back, corrected, failed to make a new low. Like I mentioned at the beginning of the video, this is a sign that price will continue to go to make a new high. So what did it do? It made new highs, made a new higher low, and then formed a new higher high. But what did price do? Price came back into an area where we previously sold from, right? So this was an area that we sold from in the past because we took our sales from this zone right here, right? Based off our higher time frames. Now, when I took sales again, oops, I just moved that alert, so I'm just going to delete it. When I took these sales here, it was based off of me understanding my structure, right? So my understanding my structure on my smaller time frames. So on my smaller time frames, the structure was as such. We had higher highs and higher lows. And then we had a higher low point here that got broken. So let me show you guys here. This higher low point got broken with a brand new retest. And then what did I have? I had a bearish engulfing signal here, in which I entered after this bearish engulfing. So one thing that you want to understand about gold is you will always wait for the candlesticks to close inside of trading gold. All right, so let's go ahead and put that into the notes. You will always, you will always wait on the candlestick to close when trading gold. Now this is super important because if you do not wait on the candlestick to close on gold, then you can get faked out and get wicked out like something crazy, right? So going over this trade here, we can see that we broke, we retested, wait on this candle to close, and then I sold it down to the next level of support here, which is this black line, and then I got out of the trade. The reason why I got out of the trade is because this level of support, and then I also knew that from this trend line, so this stemmed from me having my top-down analysis and doing my thorough research on where price was headed, and based off of understanding the story of price, right? So me understanding this trend line was every time price touched this trend line, it bounced, and then price broke above this trend line, came back to here, and then what could I potentially expect based off of what it did in the past is I could expect it to bounce. So what did it do? It bounced to the upside because we broke, we retested, and then we will potentially be looking for those buys. So another thing in gold that you always want to do, you will always take gold step. They're not looking to hit home runs on gold. You trade gold to the next area where of reaching, meaning that if I have a huge level of support, in this case I had a level of support here, I'm not going to just assume that it's going to break this level of support without having the clear signs of market structure telling me that it's breaking this area. So once price came to this area along with this trend line, I knew that there was a high probability chance that price could reject this area, so I should close my trade. Now, as you can see, it pushed down a little bit further, but ultimately we respected this area, right? Now, with then respecting this area, what do we do? And this is where details come into play very crucially inside of trading gold. So as we can see, if I go down to my smaller time frames, this is all market structure. So one thing I want you guys to understand is that market structure is key, right? So if I look at my 5-minute structure, I have a lower low, lower high, lower low, lower high, lower low, right? When price respected this trend line and then gave me a brand new impulse and then came back to correct and retest this trend line, what did price do? Price failed to make a new low. So that was my sign to say that I am going to go to the upside because I'm failing to make a new low. And then I put my fibs point A to point B, So from my low point to my high point here, and I had an 88.6 retracement. So if you've been following me for a while, you know that my 88.6 retrace is going to tell me where the market is headed next, right? So based off of this 88.6 retrace, I carry price to this negative 61.8 TP because that's my final TP based off of my fibs. My fibs tell me TP1 is a 0, TP2 negative 27, and TP3 negative 61.8. So based off of this move, I see that I had an impulse push that made a new high. Price came back to correct, failed to make a new low, and then guess what happened? I entered off of this bullish price action signal that let me know that buyers were stepping inside of the market. So we had this bullish variation signal here, and I entered the trade here. And then, like I said, I targeted that negative 61.8 take profit level, right? And this is all based off of understanding market structure. So to break this down in hindsight, basically all this setup was a break of structure, came back to retest, and then continue, right? So this was the break. This was the retest of the previous level of support, and then we had a continuation. So this was the break. Price came back to retest this level of support, failed to make a new low. Then we had the continuation to the upside. So this is the exact same trading model that I use when trading gold. And this is exactly how I trade gold on a day in and day out basis, simply by following that trading model, right? Now, going on to this trade right here, same concept. What did I do? We had a high, we had a higher low, and then it formed a new higher high. What did price do? Price came, broke this previous level, this high point here, came back to correct. We maintained this level of support here and failed to make a new low. Once we failed to make a new low, that was a sign that price will then go and continue to make a new high. So what did I do? I waited on another bullish price action signal to tell me that there are buyers inside of the market and price was retesting this area. And then I entered another buy position here and then put my fib point A to point B. You can see I carried this to my negative 27 take profit level, right? So I carried this to my negative 27 take profit level, and I got out of the trade because price began to stall at this area. And then I also understood that this was a main level of resistance where price rejected from in the past. So where we took these sales here, this is where price sold from in the past. And then what do I could expect? I could expect price to have some trouble breaking this area because we have sold that previous area in the past. So with that being said, based off of all of these trades that I took the previous week, I was able to make over $16,000 like I showed you guys in the beginning of the video. But it's all from me understanding market structure and understanding where the market is headed and understanding the price action, which is going to tell me, are there more buyers inside of the market or are there more sellers inside of the market? Now, another thing I want to go over is my stop loss placement, right? So my stop loss placement, as you can see here, my stop loss placement is always beneath a previous higher low or a previous lower high, right? So in this case, my entry was here, my higher low was here. So I have my stop loss beneath this area. In this case right here, my entry was here, my higher lows was here. So my stop loss was beneath these lows. On this trade right here, well, my entry was here, my lower high point was here, so my stop loss was a bit above this lower high point. So in this case, my stop loss was 127 pips, this one 142 pips, and then 190 pips. But you can see this is a 2.5 risk to reward, this is a 4-to-1, this one was a 5-to-1, this one was a 2-to-1 or 2.6 risk to reward. This one had a stop loss of 300 pips. Why? Because I knew that if I had to take this area into consideration, that this was a level of support. So when I took this trade right here, I didn't really have another lower high point to base it off of besides all the way up here. So when I took this second entry down here, I had to be mindful that if price broke above this level of support here, then more than likely it's going to pull back deeper. So whenever I'm placing my stop loss placement, I need to have it in an area where if price breaks through, it's more than likely wrong. So what most people go wrong trading gold is that they don't have their stop loss in an area where the fluctuations of price won't hit it. So that's one main thing that you want to understand, is to put your stop loss in an area where it is safe and you won't get wigged out. So no, none of that trying to like penny pinch and have 30 pip stop losses on gold, because you will always get stopped out damn near every single time, right? So that's one thing that I want you guys to focus on as well. And then another thing, when trading gold, your risk management has to be on point, right? So you cannot trade gold and try to, you know, risk half of your account or load the lots or whatever the case may be. Like, you have to use proper risk management on gold. So when using proper risk management on gold, I like to risk 5 to 10% on my positions. Meaning that if I take 10 trades at 10%, that means I would have to lose 10 straight trades to blow my account. I would have to lose 20 straight trades at 5% in order for me to blow my whole account. Now, me personally, I believe in my skill set enough where I know that I'm not going to lose 20 straight trades in a row. I'm not going to lose 10 straight trades in a row based off of the way I trade and my overall strategy, right? So if you guys haven't been following me, go back and watch all of the market structure videos. Go back and watch the full trading camp series. Actually, and that will pretty much break down exactly how I trade. But I like to risk about 5 to 10% on my positions. And then I also like to scale into my positions as well so that I can maximize my move. But whenever I scale in a move on gold, it will look like such. So let's just say I have an entry here. So off the break and a retest of this area. So if I take a buy here at this area, my next scale in opportunity is going to be if price forms a higher high and then pulls back and forms a new higher low. So let's just say that we have like a trend line break and retest like such. I will scale in another position here while my targets are, you know, somewhere up here based off of my -27. So let's just put my fib here. If my targets are based off here at this -27 and I get another break and another retest, I will scale in another position here to then add to this like such. And then let's make this blue. And then my stop loss will go beneath this higher low point. And then when I risk this position, I'm not going to use the same lot size. So let's just say I used 2 lots here, right? So 2 lots here. When I scale in on this position here, I'm going to use possibly a 1 lot. So I'm not going to put myself at risk where if this begins to pull back, it's going to wipe out all of the positions from this 2.0 lot, right? So I have to be mindful of that when I'm scaling in. But that is how you maximize the full potential of catching a move on gold, right? So let's go back to this setup right here. This setup right here, had I held this position and not closed, this was another scaling opportunity. So I took the buy down here. We broke above. We came back. We failed to make new lows. And then I had another entry here. Now, had I held this, like I said, could have been another scaling position. But since I closed this trade, it was just another entry and another setup in itself. But it's the same concept applies. But like I said, I don't like to hold my trades for a very long time when trading gold, right? Now, let's just show you guys. I want to show you guys another thing with gold. And this is just something that I use, but it's called the trading sessions, right? So the trading sessions when trading gold gives you a sign and gives you insight on how much gold is actually moving during the sessions that you are trading. So I know that I like to trade New York session, but I also like to trade Asian session as well, because Asian session has a lot of volume. So as you can see, the range between Asian session, which is Tokyo, it says that it moved 320 pips, 302 pips. Yeah, 302 pips on the Asian session, and New York session moved about 400 pips. So me understanding that, I know I can catch a decent move during Asian session. I can take a trade around 7 or 8 o'clock, and then it hit my take profit by, the middle of the night going into London session. So me using this tool allowed me to master gold because I knew when it moved the most, right? So I understood it moved the most during the New York session or Asian session. I can take advantage of it. And I know that if it consolidates during New York session, more than likely the move is going to be ready during Asian session. So that's one of the things that I use as well in order to to trade gold. So in order to get trading sessions, you can just come over here to the indicators tab and type in trading sessions, and then just click it here. and then you can see it pops up on your screen as such, right? So that's one thing that I like to use for gold as well. And this is how you master your pair. This is how you get insight on understanding how much price is actually moving and understanding the fluctuations. So I know that if gold is fluctuating, you know, an average of 300, 400 pips in the range, then I know that I have to have my stop loss in the correct area where it's not going to get hit. So I can't have 15, 20 pip stop losses on a pair that's fluctuating 300, 400 pips in one session. It's like, that just doesn't make sense. You're just asking to get, you know, you're asking to get stopped out, right? So that's one thing that you guys should use as well. And then another thing, like I said, we talked about waiting on the candlesticks to close and always taking gold step by step, meaning that you're not looking to hit home runs. And as you can see, every single one of these trades that I've been taking weren't home runs. They were just simply trades that I took during the session that I was able to take advantage of, close the trade at the next stopping point, and then reevaluate. So that's another thing that you guys want to focus on, is take the trade, not hit home runs, reevaluate every single session or every single day. Right now, this is how I trade gold, because I intraday trade it. I don't scalp it, I don't swing trade it, I intraday trade it. But this is what works for me, and I'm just giving you guys my hindsight and my personal opinion on how I was able to master trading gold. You can even see, I don't know if you've noticed at the beginning of the video, my hoodie literally says gold and my chain literally says XAUUSD. So that just gives you, you know, some hindsight on how much I actually trade gold and how much I love trading gold, right? So with that being said, you guys, sorry guys, make sure you guys are inside of my free Telegram chat, because like I said, I go over all of my gold trades that I take. So as you can see on the screen, I give all of my breakdowns on gold and what I'm overall looking for throughout the week. And then you can see all of the trades that I've been taking, so forth and so on. Like I said, I give all of the video breakdown. So if you want to join the free Telegram chat, then the link is in the description. And then also all of the trades that I take on gold, I call out in my side of my free signals chat. So if you want to be inside of my free signals chat, then just join my free Telegram chat, and then it is a pinned message on how to join the signals chat, so forth and so on, located inside of the Telegram community. So I hope this video was super helpful for you guys. It's been a couple months since I've been on YouTube. This is my first video back on YouTube, but it was just, I feel like this was a good video to do. A lot of you guys are inside of my inbox asking me, you know, how I trade gold, how do I analyze it, so forth and so on. So I just want to give you guys this breakdown. This video is probably kind of long. I know I was talking for a minute, but make sure you guys hit that like and subscribe button and join my free Telegram chat, where I go over, like I said, all of the gold trades that I take. And then let me know in the comment sections what you guys want to see. And I also have a surprise for you guys. Trading Camp 2.0 is on the horizon. So if you haven't watched the first series, Trading Camp, where I pretty much gave out a free course inside of my YouTube channel, go and watch that, because like I said, it goes hand in hand with everything that I was teaching you guys today on trading gold and my style of trading. So with that being said, I hope this video was super helpful for you guys, and I will see you all in the next video.